What's up, everybody? This is Jimmy with Trading Decoded. It is April 15th. Happy Tax Day 2025. Had to file an extension today, speaking of taxes, but I'm going to owe a lot of money, and that does not make me excited. But that said, the chart's not making me excited either right now. We got to play a couple of good trades in the morning, but as you can see, the title of this video indicates that maybe you should know when to walk away. And what I mean by that is, when the things that you look for to set up your trades are no longer working, you need to recognize that, accept it, and walk away, because you'll turn a green day red, right? For those couple of you who did that today in our community. Nice green day, many of which a week's pay worth turned from green to red. Some people 2 days worth of pay. It doesn't matter, guys. The longer you spend in these markets, especially as volatile as they are, the more likely you are to go backwards in progress, not forwards. Now, if you're interested in learning how I trade, well, take a look at this book right here. There is a hardcover, a paperback, and now an ebook, all available for you to peruse at your leisure. Very good information in those books. But today's takeaway is get in, get your money, get out. If you don't know the 5 things that are causing you to not be a profitable trader or struggle to progress as a day trader, well, you should take a look at this video. I think it's over here. This video up here, I don't know. One of these places in this corner, I have made a small mini series where the average length of the video is about 10 minutes per video. Do yourself a favor and watch it, because if you are one of the people that are falling victim to 1, 2, 3, or 5 of those things, it's every answer you need as to why you're struggling to progress as a day trader. Guys, this is not an easy business. It's not easy. It's easy to understand. It's easy to follow a strategy. But when you mix the emotions and the feelings into it of making money and losing money, well, it seems like a lot of those plans and strategies and all that go right out the window. I'm trying to explain to you why that is, how you can minimize the effects of it, and, well, how to progress as a day trader. But with that said, let's go ahead and take a look at the charts, and we'll go over what we found. We're going to go quick on these guys because there's not much to talk about other than why you should consider walking away after you've made your money. We had a call line on the Qs at 458.13. We had a put line at 457.59. Unfortunately for us, we got through the call line before the market opened, and it went straight to the line we were hoping to get to, which was the next target up. Not a big move, but about a 40-cent move. Good way to start the day if that's what you're looking for. So because we were opening up here, I told everybody, guys, here's what I want to see in order for me to take calls. I want to see a pullback at least to our call line, and I'd love to see ADD printing a green candle. If that happens, I'm taking calls, and I'll be hoping that it continues up to at least the orange line. We closed above it. We are hoping for the next orange line. Take a look at ADD. It's still printing green. Awesome. We hold on. We get through the next orange line. Then SPY hits resistance. And on the very next one, before we got a big red candle on ADD right here, I started to recognize the wick was growing on the top of this candle. SPY was at resistance. ADD started to put a wick on the top of this. And I said, guys, it's starting to look weak. I'm not going to hang on to this for much longer. Ended up with an 18.5% win. And that was it for me for today. I'm good with making 18.5% on my investment in what? 1, 2, 3, 4 minutes max. There's nothing wrong with that. It's actually less, more like 3.5 minutes, 3 minutes actually for that. But nonetheless, if you don't take that trade, it's completely understandable. We start to look for other reasons to consider trades. Number 1, is ADD still moving up? The answer is yes. We had a single red candle on ADD between the times of 9:30 and 9:42. So in 12 minutes, we had one red candle. It was a pullback when both charts were at resistance. We were not looking for puts today because the market had a nice move up leading into the open. And so our put line never got even come close to. But what did we put in right here? Well, we put in a higher low. Guys, what happens off of higher lows? What are we more likely to do? Well, we're more likely to break resistance. That's what we're likely to do. So if you're looking for a trade setup, well, a higher low we're looking to break resistance and head up to the next resistance. Whether you're counting this as resistance or this, either way, ADD was green. SPY was on support. Qs were on support. Let's go. So you have an entry to the upside. And here was your first potential exit. And that was because in pre-market, we had, was it not here? No, it wasn't on here. I don't know why we were suggesting this as an exit for the same reason we were suggesting this one. We were struggling to move higher. I said, guys, the wicks on the 2 candles before this one aren't looking so good. I said, and then when ADD started to print a little bit of a wick here, a little premature, I will admit. It just looked like we were struggling to move up on Qs and SPY, and ADD was hinting at, again, not a red candle, but just a wick on top. You could see not a single one of these, for the most part, had a wick on top, indicating that it was very strong buying to the upside. So I was not wanting to hold on to that for much longer. I was not in this trade, by the way. I got in here, out here. But we did ultimately put in another higher low, got through that resistance, made it up to the next resistance. So some people did hold, and those people were the ones who got in all the way down here, so they didn't have to worry about losing money on the trade, right? But for anybody who got in because we breached resistance, looking for the next resistance up, I try and capture the majority of the move, or what I feel the move is. Why? Well, very simply because if I let too much of a good profitable trade get taken away, not red, just taken away. If I'm up $1,000 on a trade and I let it pull back to $600, guess what? I'm irritated. Not that I'm sad that I'm walking away with $600. I'm happy that I'm walking away with $600, but what I'm sad about is that I could have had 1,000. And I didn't take it. And for a lot of people, whether you believe it or not, that becomes the reason that many folks get stuck in hold and hopes. Why, you might ask? Well, it's simple. Because you don't forget how much you were once up, and you'll tell yourself, damn, once I get back up to that level, I will go ahead and take my profits then. The problem is, if you don't get that profit again, you will watch that thing go straight down to zero. Trust me, I've done it. You've probably done it. You just have to admit to yourself that it happens to you too. If it doesn't, kudos to you. I'm jealous. But that's why I'm a little gun shy trying to hold on to my trades for long. And let's not forget, and you'll see later on in the chart today, why we don't like to hold our trades for very long. Because for those of you who are trading different strategies that have you relying on, well, holding longer, you got to eat large piles of doo-doo today. But however, the case is we got to that resistance. We pulled back right to support. Now, I had told everybody over here, I said, guys, if we can get through this level of support, this was after we bounced up, I said, I'd be looking for short. I'd be looking for a short move because the next support down is all the way here. Now, keep that in mind because we were talking about that around this time. Now, for my less aggressive traders, probably could have waited till across this orange line, okay? But nonetheless, we had built a little bit of a support area here. It's good to know because if we can get this breached and ADD is printing red, we have a long way to go before we hit the next support down. But we won't go there yet. We pull back. We find support. ADD's green. SPY's on support. Let's go. And, well, basically, we're hoping to at least get to the resistance that we were at before. We got there, we got through there and continued up. And to which point I said to everybody, if we close back below this little mini support ledge right here, you'd want to stop yourself out of the trade, or if ADD starts printing red or turning down. So in this case, we didn't even wait for a candle close here because ADD was putting in a lower high. Not that we really look for lower highs. SPY put in a lower high. Qs had not yet, but it looked like things were going to roll over, even if temporary. And that's exactly what they did. We pull back. We're not looking for shorts because, well, we knew where we wanted to get through support-wise in order to consider those. We have rules for this kind of stuff, guys, and trend lines are one of them. As we moved up, we put in a higher low. We get up to resistance. We pull back to support. I was trying to explain to people, when do you buy pullback, or when do you buy levels of support? Well, when SPY and Qs are on support, SPY was on support right here, Qs was on support right here, and ADD's printing green, let's go. We're expecting or hoping that we can get through this resistance. We got to it, we got through it, and then we made it up to the next lineup. Okay. Now, the fun part. Oh, and for the people who were trying to hold their calls longer, we said if we close back below this orange line here, we want to stop out of that trade. That's why that circle right there is there. Now, guys, remember what I told you several times in the past, but this is a good rule to live by most of the time, okay? If you're looking to go from calls to puts or play puts with some kind of reasoning behind it, consider a close below the trend line to get calls off the table. It's nice to see lower highs, which we put in. We recognize this, which is a good enough reason for me, if ADD is printing red, to jump into those puts early. But remember the support we were talking about over here? So we broke the trend line. We came off of a lower high, which tells me we're more likely to break support than not. So entry candle was here. And where did I tell you guys our target was in that trade? All the way down here, right? Can you see where these candles essentially stopped? Yes, we wicked below it, and I have no idea what caused this sell-off. It doesn't matter. We were already out of the trade because we stopped out. We were already looking for the idea of puts, definitely not calls because we're lower high. And it doesn't mean it's going to work, guys, but you could see the signs for when to not consider calls anymore, when to potentially shift into puts, and you should already know what the trigger is going to be to take those puts should you do it. This trade didn't sneak up on us. We were talking about this trade all the way over here. You just had to wait for the setup, and you got the move. It was glorious, and it happened quickly. But then a lot of people lost a lot of faith in the chart. So there wasn't a whole lot as far as trades to take after that we liked. But just like the rule we were looking at over here, we want to take out the trend line and the most recent support below it, and then we look for the next support. Well, to the upside, you want to close on the other side of the trend, and you want to take out resistance and hope to make it up to the next resistance. Now, this one didn't work, and this is where our trust in the chart started to wane, right? Normally, we'd want to get from resistance A to resistance B. We didn't get to resistance B, and we fell short of it. So this trade, albeit was profitable at one point, but if you didn't take those profits, well, we pulled back, right back down to the support that we had made after we broke out of the downtrend. Okay, it held. We pushed up, higher low, by the way. But this time, we get through this resistance and head up, but still not to where we hoped it would go. Guys, here's my point in this video today. If you find that the chart is not behaving the way it normally does, you should consider that a sign to walk away. I had one guy today that was up almost $400, turned it into a $400 losing day. He was up those $400 12 minutes into the trading day. Before we got off the mic at 12 o'clock, it was all gone, plus an additional $400. And another guy was up over $800 today. Got into a trade, was holding on to, if I'm not mistaken, holding on to puts. And we had a huge, this guy right here. Where is it? I think it was this guy right here. He was holding on to puts. We were looking to go down to this line here. And this candle ripped his heart out right there. If I'm not mistaken, it was that one or this one. Actually, I take that back. It was this guy right here. Just right before I was getting off the mic. So lower highs, we were hoping to break support. We did. It didn't quite make it to the next support down, which was this orange line. And you got this massive candle out of nowhere. Guys, you can't see these coming. You can't see them coming, but we see them happen every day, all the time now. This is what terrifies me. So if your trade setups are not winning or not getting to where they're supposed to be getting to, sign number one. If you start seeing these green and red candles that are $1, $2, $3 out of nowhere, just understand that that's wrecking people who are holding on to their trades for long. And those are the easiest ways to become a hold and hoper. If you're holding on to puts, even if a stop loss is in place, candles like that happen that quickly, skip right over stop losses. And before you know it, you're down a big amount of money, an amount of money that you're not happy losing. So most likely you're going to want to hold and hope it. And sometimes it works to hold and hope, and sometimes it doesn't. But you don't want to make a habit out of that. So my thought process for you, guys, take a look at this image here. If you have my book, you're well aware of it. If you're in my community, you're well aware of it. Right here. This is the ladder of consistency. We want to be the guy on the right side, not the guy on the left. We all know, or maybe you are, the guy on the left. Try being the guy on the right from time to time. You might be happy. You might be happier. Your account will be happier. Your wins will be smaller. But if you can do it more consistently, then you will be building your confidence and your account up at the same time. And suddenly, you start to enjoy trading. All right? So, we're going to wrap this one up, guys. If you would like to learn how to trade like I do and like I'm trying to teach other people to do, as I mentioned in the beginning of this video, consider buying my book. It's a good read. It's an easy read, not overly technical, not super crazy. No indicators, guys, just your eyeballs. That's all you need, okay? And a solid understanding of price action, which the book teaches you. So do I in my Discord community, which if you'd like to join that as well, first 7 days are completely free. You don't put any credit card information in. Just jump in there and listen, watch, see if it's going to be useful information for you. If it's not, you've lost nothing other than a couple of minutes of your time or a day or two or whatever. But you don't have to put any money in it, okay? Unless you find value in it. Lastly, if you got any useful information in this video, please like, share, and subscribe. If you'd like to join our Discord community, well, I already told you how to do that. There are links down below. I'd love to see you in there. And I hope you all have found some money in the markets today. Until tomorrow, I love you guys.